Welcome back everybody. I'm going to show you something that might scare you a little bit, and I don't want you to get too scared because there's no reason to be too scared, but there's a couple of reasons really that now is a time to be a little bit vigilant and maybe think about Tether more than think about anything else. Now for me, I always have something riding in these dips, but I'm not comfortable in going all in on anything at any point. And I'll show you some of the reasons why. Now I have bought some in these dips. I bought SXP and I bought BNB. That's the only things I've bought on this on these dips. They're the only things that I felt like I was comfortable enough buying that would have a reasonable bounce, and they've bounced quite well. But I want to show you something. So first of all, we'll look at Bitcoin, and then I'm going to show you something with the S&P. So basically, this is the deal with Bitcoin. We have this uptrend trending level of support and resistance, okay? And I talk about it all the time. But I'm going to show you some examples of what happens when we hit that and we get a nasty rejection from it. So clearly we hit that this time and we couldn't take it anymore. We were trying to break above it, and we did, but this time it's clear and it's obvious that this is still a very, very important part of Bitcoin's price action. So let's measure out the drop so far from there. And this has only been what, 4 or 5 days. From top to bottom, that's almost 18%. Okay, let's have a look at when we did that last time. So let's have a look at this trend line. Where did we get rejected from it last time? So that's where we hit it just now. You could argue that this here was a rejection point. So we'll measure that out to this bottom area here. That was almost a 20%. Now you could then extend that all the way down to here, but that was, you know, just that support, that resistance trend line wasn't exactly instrumental in that move. We all know what caused that, but it did happen. We were rejected from there, and then we came all the way down there. Okay, so we're talking the last time it happened, we were talking about a 20% drop with a potential 64% drop, but don't worry about that one. So let's have a look at the last time before then it was it touched this trend line and rejected. It would have been here, and we came down and formed a double bottom here. That's a 35.5% drop from there. Okay, so the trend line is showing us that we don't like to test it, do we? We also found support on it at this for 1 day, didn't we, at this level here? So let's measure that one out. So we supported, and then we were rejected, and we came down to these levels here. Talking 20%, 20.5%. You can see we like the support on it when we get it. We do like that support when we get it, but we don't like being rejected from it, do we? Even these little ones here that appear to be little. Let's have a look at that from top to bottom. And so top to bottom, we're talking 18% from there to there. So again, that's kind of what's happened recently, an 18% drop. You know, and again, it just the examples just go on and on and on and on. So rejection here to this bottom level here, 17%. Again, that will be about 22% on that one, and again and again and again and again and again and again. So you see what I mean? This likes to be rejected, but the overall, you know, we're generally talking about 16 to 20% rejections from that level, provided nothing else happens on top. So at the moment, you know, a 16 to 20% drop from here to here is basically where we are at right now, about 18% drop. So that is kind of normal for a rejection from this level, historically speaking. Now, just because it did it in the past doesn't mean it's always going to do it. We always have, you know, larger ones to go by. There was a 35% one that we saw a minute ago. There's this 65% one that we also saw a few minutes ago. So I'm not saying that the bottom is in for this drop, but what I'm saying is that this is the general average of a dump after hitting this level here. So we've hit this level. Now, I wouldn't call this a double or a triple bottom. It doesn't look healthy, really, and considering we're being rejected from 10,500, we're actually beneath there. We're still outside of the Bollinger Band as well. I believe we are on the daily. So it's just not looking very good, really. And like I say, this trend line is what's doing it, and historically speaking, you know, we're looking at about between 16 to 20% drop or more. Okay, so the minimum would be about 16% drop, I'd say. The maximum could be about 35 to 40% drop. So that means that there could be more to go. So let's measure this out. If it were to do a 35% drop from the trend line itself, where's that going to take us? What's the price action? Where would that bring us? That would bring us, oh my god, all the way down here to 7,671. Do I think that's possible? It's definitely possible. Is it likely? I don't think it's likely. I think that because this trend line has historically caused such damage in the past, that we're still hungry for more. We're ever so close to that CME gap just down here. And in all fairness, there's CME gaps quite a lot lower than this too. There's CME gaps all the way down here. So let's not get hungry for CME gaps, but this one's ever so close. So I'm thinking that maybe we'll do that. And we also have this trend line here that goes all the way down from the parabolic top, and it's been resistance. It's never been support, so we want to see if that turns to support. If it does, then that would be an okay situation to be in as well. But now we've got all these moving averages steeply facing down. They're plummeting. We need to move up, and if we don't, there'll be death crosses. We've already got death crosses here on the 4 hour has taken place. We've got death cross probably on its way at some point soon, maybe not that soon, but it's very, very steep on the 12 hour, so it's not looking good. It's not looking good at all. Now, before we move on to XRP, I want to show you this. This is the S&P 500. Okay, so this is one of the extra pushes that pushed Bitcoin and cryptocurrency off the cliff. All right, there's been quite a few factors, like way overbought DeFi projects. Probably a lot of profit taking because there's been some big bold moves going on for a long time now. A bit of profit taking, which is I think what's happening on the S&P. Don't think we're crashing. This doesn't mean that we're crashing when this looks like it's profit taking, but it was a significant drop from top to bottom. Let's measure that one out from top to bottom. That's a 6% drop in 2 days. That's a big deal for traditional markets like this. Now, and the Nasdaq was even bigger than that. But this is a nice rebound at the moment, so it looks as though it wants to continue going back up. We do have a negative cross on the MACD, but it's not it's not that steep, but it has happened. As far as moving averages are concerned, it's all postured in the right way. So, you know, we have to bear in mind that stocks and shares and commodities and cryptocurrencies are all very tied together. They're correlated, whether you like it or not. And this is going to be a driving factor coming into the next week. Is there going to be more sell-offs in traditional markets? Is that going to continue? If it does continue, there'll be more sell-offs with Bitcoin. And with the way that Bitcoin looks right now, we could be looking for bigger, bolder moves. Am I saying 35% from top to bottom? No, but is it possible? Yes, because of what we saw previously. Like I say, it's happened before, and it's happened more than 65%. It's happened at 35. It's happened at 65. At the moment, we're in the middle ground. We could recover from here, but there's always that chance, and the chance depends on the stocks, I have to say. So let's have a look at XRP. So XRP right down the bottom of the Bollinger, bouncing on the 100 simple. We've got MACD is still diverging, with the histograms way low. We're moving into negative territory here. Doesn't look good. We really do need to bounce from here. We'll have a MACD, a death cross take place. Yeah, way back here. So we've got a death cross on the 4 hourly. That will be transpiring onto the 12 hourly, I'd imagine. Not relatively soon, but in a couple of weeks if we haven't recovered. And what we'd need to do is recover this level here. The 200 exponential is leveling off almost completely horizontal now. So if we can't reclaim that, and we are certainly being rejected from it as of today, then this death cross will play in on the 12 hour, and obviously that will then transpire to the daily chart. At the moment it's basically looking very weak. Everything's looking very weak, and as much as I would like to say that there's something in this to be traded, I don't think there is. I think there's a very strong chance that the whole thing could drop completely stone dead, and the only thing you could really look at doing is buying those dips and maybe just taking profit on them, you know, almost on a daily basis, really, because there's been, as we've seen, there's been very strong moves from buying those dips, especially on these ultra shit coins that they're selling now on Binance. There's been some very strong buybacks, but the momentum on a chart like this looks like it wants to continue down, and we really do need to see what's going to happen across the board with the financial markets. I'm going to keep my eyes open to see how these things fare out, because if we're looking at this, we've got just look at some of these here. We've got DAX is red, the S&P is red, the Nasdaq is red. It looks to me like the dollar is recovering from its slumber, and if that happens, then it would be detrimental to everything across the board, from Bitcoin to gold to oil to stocks to absolutely everything. So these are it's a very complex situation at the moment. When everything's tied together, you really have to pay attention to all of it at this point, which is one of the reasons that I moved away from traditional markets and why I got into cryptocurrency, because there was a lot less of this kind of messing about before. It's very apparent now that it's very much tied into everything else, way more than it used to be, making it basically a bit harder, quite a bit harder now actually to trade this. It was never used to be so hard. It's definitely got a lot harder. So what I'm going to say, and in summary, is be very careful with what you're doing. I am personally only trading. I'm trading less than 50% of everything on buying dips. The rest can stay in Tether. I'm not shorting anything either. It's not worth the risk. I don't know what's happening right now. The trend is continuing to go down. Our first opportunity for a bounce is basically now, but we have to wait and see what happens when the financial markets open up and we see what's going on with stocks. Anyway, I'm going to leave it with you there. I do have some other sort of, I suppose, I'm branching out into a different area of making videos. I'll leave links for you to watch. They're kind of on a fundamental view on things, a higher quality of production, I have to say. But give it a watch if you want, and hope you enjoy them, and have a good evening. Thanks for watching. Take it easy.